in which we have, yeah. Good evening to one and all. So I welcome today everyone to today's WOW series of in which we have fraud detection and prevention as a topic, and we have our faculty CA Rachna Parikh. So before starting the session, may I request to play for ICI motto?
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. So, friends, at WIRC, we have, n number of programs coming up under the dynamic chairmanship of CA Ketan Sayya. So I request everyone to participate in the same. Like every Wednesday, we have WOW series, and there are on this Saturday we have program on cooperative societies. Then we have one more program on a cricket match. We have planned it. We have one program on bank audit, a program on code of ethics. So I request everyone's participation. And may I request our chairman CA Ketan Sayya to address the gathering. Over to you, sir.
Thank you, Jinal Madam. Thank you so much. Let me first welcome our learned speaker, Rachna Madam from Baroda. Madam, thank you so much for sparing your valuable time and agreeing for taking a talk on forensic audit. Let me also welcome our regional council member, Rekha Damankar from Pune. Rekha Madam is the committee chair this year. Rekha Madam, thank you so much for agreeing to, lead this women committee and being there and, sharing a lot of ideas on the vision and ideas on the women committee, women and young member committee. I'm sure with your under your able leadership, this committee will do a lot of good programs, and it will be beneficial for all women chartered accountant as well as young members. I think very, very interesting and apt topic chosen by the committee, the fraud detection. Basically, if we see the entire area of audit today, more than a simple audit, everybody is expecting that we do kind of, fraud detection. Of course, even in a stat audit, people's expectations have risen. And looking at the current scenarios, the cases which are going on in NAFRA, the verdicts which have come in NAFRA, I think even if we are carrying out internal audit, stat audit, we must learn what is going on in the forensic. And I think who better than Rachna Madam can be a speaker on this topic. She has been, in the practice for past several years and leading, in the entire gamut of audit and assurance. She has been doing a lot of internal audit, forensic audit. Thank you so much for that. And I'm sure next 2 hours are going to be very, very interesting and learning on the forensic audit. With this, let me once again welcome all of you to this session on fraud detection and forensic audit. Thank you so much.
Thank you, sir. So, as said by sir, we have today Rekha Madam, chairman of the committee. May I request Rekha ma'am to formally introduce to our today's learned speaker. Over to you, Rekha ma'am.
Yes, thank you, Jinal. Thank you, Ketan bhai. Thank you for having a trust on me and allotting me this committee as a chairman. Thank you, Jinal, for nice moderating the session. I will just keeping my video off if you don't mind. Yeah, I'm at some workplace. Rachna Parikh, ma'am, welcome very much. Rachna Parikh is a partner of Parikh Shah Chotalia and Associates, Baroda. She has done the internal audits for a lot of MNCs, then subsidiary of German companies, and internal audit of the companies which are engaged in terminal automated systems, liquid and gas fiscal metering system, diesel exhaust fluid plants, etc. She has handled internal audit of construction company, handled internal audits of NHAI, Gujarat Tourism Corporation, SHCI, LVS Stock Services Limited. And these audits are of consisting of companies having turnover from 100 crores to 1000 crores. So fantastic experience, ma'am, you are having. And she has experience of more than 8 years in the area of engagement for designing and implementation of internal financial controls, which included the deliverables in the form of process flowcharts, SOPs, RACMs for large companies, including Gujarat State Electricity Corporation, having turnover of more than 1000 plus crores. Then she has provided corporate law advisory services for more than 15 years to a lot of companies. Then other areas of practice, she has been consultant for CPA services to various large private sector banks for cash credit proposals of more than 10 crores plus. She has handled some concurrent audits for large private sector banks. She has handled transfer pricing audits, statutory bank branch audits, valuable assignments for takeovers. And she has been on the 12-member committee of ICF for finalization of corporate law syllabus in September 2022. She recently been awarded as Star Woman of WRC, is independent director of the board of National Urban Cooperatives Financial Development Corporation Limited and umbrella organization for UCPs all over India. She is the member of committee of Vadodara Audit Club and Baroda chapter of Institute of Internal Auditor USA. She is an active member of Baroda branch of WRC of ICI. She is trustee board of various NGOs, and she always takes various lectures and workshops for on internal audit and internal financial controls. So with this, I cannot say the brief, but introduction. You must have now know that how learned is our faculty, today's faculty. So welcome Rachana ma'am, and with this nice introduction, we are eager to listen to you. Thank you very much. Thank you. Bye bye.
Thank you. Thank you.
Thank you. Yeah. Yes, over to you, Jinal.
ma'am. Yeah. Thank you, Rekha ma'am. So over to you, Rachna ma'am.
Thank you so
Rachna
much.
ma'am, I am also forensic auditor and handled more than 350 cases. So very much eager to listen to you. Yeah.
Most. Thank you so much. Looking forward to
I'm
meet you
sure
then because we belong to the
Yes.
same area of practice then.
Yes. So I'm sure that we will get some good insights from you today.
I'm keeping
Over
my
to you.
I'll give my best. Now you tell me later on.
Thank you very much.
Thank
Bye-bye.
you. Thank you so much
Thank you.
for
Over to
that
you now.
introduction, Rekha. Thank you. Thank you, Gina. Thank you, Ketan bhai, for that welcome. Can I share my screen now? Gina?
Yeah, please.
Yeah, sure.
Good evening, everyone. So, as Rekha Madam introduced, my core area of practice is internal audits, which is now the new age term for internal audit is now GRC audit, which is governance, risk management, and compliance audits. So we have evolved from the traditional approach to internal audit, from the traditional approach of internal audit to a very wide area of coverage and wide area of scope that we can give to our clients in terms of internal audit. Today's workshop is mainly will be mainly covering the practical aspects of fraud detection and prevention. This is one area of the lot of areas of internal audit that we usually do. So I'm not going to go into the other areas. We'll strictly stick to fraud detection and prevention. And that too, I'll try to cover maximum of practical cases or checklist as much as I can, so that which are going to be useful to you in your at your client's place or in the field. So the workshop will be basically divided into three parts, which first is the understanding the types of fraud, what are the usual red flags that we usually observe, but we sometimes we catch hold of it, but at times we ignore it also, or we overlook it, and what is the psychology of a fraudster. Um, Part two, which is covering the practical case studies, which is and most of these cases we have actually faced in our clients during our internal audits. And third part is the prevention strategies, the technology that we can use for fraud detection and prevention, the internal controls, ethics, and the checklist that I was talking about on how to check for red flags. So basically, I'll be dividing the workshop in these three parts. At any point of time, if you have any questions, please feel free to ask so that we can address your queries at that point of time itself. I will like to make this session more interactive, because since I am including a lot of practical examples, it will be better if we are a small crowd of around, I don't know what are the number of participants, but I guess we are a small crowd of 30 to 35, so we can always have interaction. So that is what I was planning for the workshop today. So if we start, let's start with the understanding fraud, which is what are the kinds of fraud, the red flags, and the psychology of a fraudster. Okay. Mainly if we talk about, or the kind of frauds that we have come across in these many years are the financial statement frauds, which is basically of manipulating the financial reports, understating the losses or overstating the profits. These are the kind of frauds that we usually come across in case of financial reports, overvaluation of stock. These are the financial manipulations that usually happen in financial reports. Now, when we are talking about manipulating financial reports, yesterday only we had a news about this IndusInd Bank, where they are terming it as a mistaken case of mistaken accounting entries. It is still under the review of PwC. PwC has been appointed as an external agency for checking out what is the exact quantum of fraud. Right now, it is quantified at around 1,600 crores. But it was a case where there was a mistaken accounting entry in case of hedging cost. So these are the financial reports manipulations that happen. It can lead to fraud. See, right now we are not in a position to conclude that it is a fraud, because when we talk about internal audit or GRC audits, our role as an internal auditor is not to investigate. We are not investigators. We are not professional investigators. Our role is to make an observation backed up by proper documents and then present it to the board, and they can appoint an external agency for the further investigation. So whenever we talk about determination or conclusion about a fraud, when we give a report, please ensure that you don't term it as fraud unless and until you have some external agency also finding the same thing, that yes, it was a fraud. Because as internal auditors, we are not professional investigators to make a conclusion that it was a fraud, right? So these are the cases. This was a case that I read about yesterday. Another case from Bombay I just read about was the Leelavati Hospital case, where it talked about some 1,000 crore plus fraud happening, where the trustees have embezzled the funds. So again, just yesterday I came across these two cases where there was a financial fraud involved. The other type of fraud is asset misappropriation, where there is a theft of cash, misappropriation of cash, the inventory going missing, or the inventory the pilferage of inventory or assets. So these are the kind of asset misappropriation frauds that happens. The third is the corruption and bribery, where there is a vendor kickbacks, conflict of interest, where say the purchase manager's brother-in-law is the main supplier of the raw material in a company. In that case, there is a conflict of interest happening. So in case of large companies or MNCs, what the usual system they have is that when they employ somebody in the KMP position or the high level position, they always take a declaration of whether any of their relative is in any way associated to the company. And in case there is a conflict of interest happening to on account of that association, either it is set right, or in maybe by not stopping the transaction with him, or unless it is not detrimental to the company. In that case, they will continue. But in case it is detrimental or it is creating a conflict of interest, the company, the professional companies will usually try to stop that transaction. So that is conflict of interest. And then, of course, cyber fraud, which is the very in thing right now, where a lot of identity theft is happening. There are phishing mails coming up. There are phishing messages coming up where we are supposed to click on a link, and then there is a lot of money going here and there through transactions. And believe me, there are like the best of the people, the most educated of the people fall prey to this kind of messages or emails. So please be very careful on what links you are clicking on, what messages you are replying. And it's not even about clicking on a link. Even if you do be hacked, your transactions can be hacked into. So please be very careful on what you are replying to, an unknown email or an unknown message. Right. So these are the 4 types of fraud that are broadly happening when we talk about GRC audits. So there was a criminologist in the 1970s, David Cressy. He gave this phenomenon of the fraud triangle. Now, what is a fraud triangle? There are basically 3 things that are happening. Sorry, I hold on, please. Just give me a second. So this fraud triangle, it talks about the 3 main reasons that fraud happens. And this theory was propagated by this criminologist called David Cressy in the 1970s, that what are the motivations that lead to fraud? I mean, there are, of course, nothing happens without a reason, as we say. So what are the reasons that fraud happen, or what are the reasons that a person is motivated to manipulate things or manipulate a transaction or have some kind of fraudulent activity going on in a company? The first and the foremost is the pressure. There is peer pressure, there is pressure of financial problems, there is unrealistic targets that sometimes the top management will give to the lower people, the managers and the executives. So these are the kind of pressures. Like, we know the market is not more than 1,000 crores, and if we expect our executives to deliver a turnover of 1,200 crores, it's next to impossible to achieve that 200 crores without, and that is an unrealistic target. So sometimes it's also a responsibility of the top management that this kind of frauds happen, because they give unrealistic targets to the lower staff. So that is one pressure. Personal financial problems. There are social pressures. Now, recently we came across a case in one of our clients where the top executive who was the project manager, he was in charge of the project. It was a EPC company, and he was the project head. And the reason for the fraudulent activity, or the reason for fraud that he ultimately said was that my wife, and she has 3 or 4 sisters, and all of them are multimillionaires. And so when we go out with them, we feel that, okay, I need to give better to my children. And that is why that fraud happened. Now, these are the kind of social pressures that people have, and that leads them to doing a fraud. So pressure can be in any form. It can be financial pressure, it can be emotional pressure, it can be social pressure, and unrealistic targets that we talked about. So day in day out, we and especially in this generation, we are under so much of pressure even for performance that leads to this kind of activities. The second is the second part of the triangle is the opportunity, which is wherein a company is doing very good, but the internal control system is very weak. The internal financial controls are not in place. The authority matrix is not defined. The maybe the production or the O2C cycle is not how it as it should be, where the internal controls or the financial controls are not in place. There is oversight when I as a person know that this production manager is not going to look into this matter, it gives me an opportunity to, or give, at least it will be an incentive for me to commit a fraud. So I will not say that it can lead to a fraud, but it gives an incentive to commit a fraud. So, and the third part is the rationalization. Sometimes we have this, victimization mentality in us that, okay, I don't deserve this much. I know, I mean, I can, considering my status, I deserve this much. And if I'm not financially, if I'm not able to make up to that status, the other area or the other opportunity that we look into is doing some kind of fraudulent activity. Sometimes there is like, it's just a loan. I mean, I'll return it back when I'll return the transaction or reverse the transaction once everything is okay. I just need this much amount of money for this limited period. Let me do this. Let me take a kickback from a vendor, and then once I am through with my requirement, I'll return it. So these are the kind of opportunity people usually fall prey to. Then there is always also where the top management, the tone at the top in terms of governance or integrity, it's not set properly. Then the other mentality that comes into is that everyone does it, so why can't I do it? I mean, I'm not the first person to do this, so it's not going to be noticed, or it's not going to be uh, uh, catch hold of, or nobody is going to notice this much amount of inventory missing. So these are, everyone does it, so let me also do it. So that is and believe me, these are the very probable reasons that fraud happens. I mean, we have come across such reasons which are right now, when we read about it or when we talk about it, they don't seem to us to be very strong reasons to commit such kind of a thing. But yes, these are the reasons that people have when they commit a fraud. So that usually there is that 10-80-10 rule, which for fraudsters, usually 10% of the people will always think that, okay, I will never ever commit a fraud. The other 10% will always think that, okay, I mean, I'm in the look for opportunities, and they will never hesitate to commit a fraud. And 80% of the people are in between this 10%. So they if given a chance, they would not even mind to commit a fraud. But yes, that's not the basic criteria. They would want to do something. So this is the 10-80-20 rule that usually is there in fraudsters. Now, talking about red flags. So, what are the early signs that a company can get in case of frauds happening or frauds in process? So, there is a lifestyle red flag where the employee is living beyond his or her means, where he cannot afford a swanky car or he cannot afford a swanky flat, but yet he's having such a flat. I'm not saying that it definitely is a red flag for fraud happening, but yes, it is worth looking into. That is what I would term it as, because it's not necessary. There is sometimes there is an inheritance of property, and that is why he is living such a good lifestyle. But yes, it is worth looking into if you feel that, okay, he is an employee who is earning this much and he cannot afford this kind of a house or a home or this kind of an apartment or this kind of a car, and yet if he is still affording it, then there must be something going on the side. Yes, you should think about it. I do not ignore it. Do not please ignore it. The other is the behavioral red flag, which is avoiding vacations. Most of the people who commit frauds, usually you will mark it that they will not take vacations. Why can't they take vacations, or why can't they take holidays? Because they have set a certain system of transaction which is happening. Now that system cannot work in their absence. So that is the reason why they will always avoid taking holidays or avoid taking vacations. And whenever there is an external audit happening, or whenever there is a GRC audit happening from outsiders, like from an external agency, because many large companies, they have an in-house internal audit department. The CA is looking after the internal audit functions, and in certain companies there are external agencies who are appointed for the GRC audits. So in that case, whenever there is an external agency coming in, mark my words that they will always try to resist audits. Or what will they do is they will try to be too accommodating to the auditors. Like they will be so cooperative, they will be so very like they will go their way out to make the auditors at ease. Now it can be genuine also. I'm not saying that it's not genuine. But yes, we have to keep our eyes and ears open when we go to a client place, when we are into GRC audit. We have to keep our eyes and ears open, that if we are being treated too nicely, then also we have to be careful. And if we see that some high-end executive is not, high-level executive is not taking vacations or not taking holidays, then yes, you should either, he might be very hardworking or workaholic. That is the reason why he's not taking a vacation or a holiday. But yes, it's worth looking into. So that is a red flag. What is a red flag? Red flag is not necessarily a conclusion or a affirmation that there is some fraud happening. Yes, red flag is that something needs to be looked into deeper. That is what is red flag about. Now, accounting red flag is about unusual transactions, missing documents. Unusual transactions means like, say the salary was till date, it was around 9 lakh per month. Suddenly it is shooting up to 14 lakhs per month. I mean, if it's not Diwali time, or if it's not the bonus that has been given, then yes, it's worth looking into. If there is a sudden increase in cost of 5 lakhs, yes, we have to look into it. So that is the accounting red flags that we have to look it for. And these are the early warning signs, the red flags, and all the frauds that are happening. There has always been a red flag in the early stages of that fraud being executed. It's just that we have not been able to catch hold of that red flag, or we might have ignored it. That are the only two cases that can happen, because no fraud can happen without raising a red flag. So yes, why I'm stressing on this word red flag is that these are the reasons. I mean, in the next slide, over the next two slides, we are going to go through some transactions, and we are going to discuss what can be the red flags for these transactions according to you. Okay, so this next couple of slides, we can make it interactive. You can tell me, like I'll tell you the answers later on, but I've given some cases, real life cases, where you can tell me what can be the red flag in this kind of transactions. Right? Okay, so the first fraud detection exercise, we have to identify the red flag. The first case is it's an unusual vendor payment. So vendor name is XYZ Traders. Invoice amount is 499,500. Approval required was 5 lakh according to the authority matrix. The payment mode was, of course, RTGS. Invoice date was 29th February 24. Delivery date is not recorded in the system. Okay, goods delivery date was not recorded in the system. Invoice date was 29th February. Now, do you see any suspicious activity in this case? And the next question is, what further checks should be done? I mean, you want anybody who can answer that? What are the suspicious activity in these transactions? Anybody? Okay. In the first transaction, the first red flag that for me, if I am an GRC auditor, the first red flag is that the invoice amount was 499,500 and the approval required was 5 lakhs. So somebody has tried to make keep the transaction below the approval requirement limits. Of course, that is a first red flag. And second was there is no record of the delivery actually happening in the system. So we are not very sure whether there was actually a goods delivered or not. So we are not sure about that, whether the goods were delivered or not, whether it was a genuine transaction of goods inward. And maybe the XYZ traders, you have to check is that whether it was, we have entered in any of the past transactions in with this vendor or not. So these are the first red flags that you have to, we can check for. And what further checks should be done? I would say that the first check I would do is that I can check whether XYZ was a genuine vendor. I would go into the GST website and check whether it's a genuine registered vendor or not. The address and details and check whether the detailed address is correct or whether it is actually existing. Believe me, people, there are addresses listed on a company's website which nowhere exists. We have come across such cases. I would check the invoice, the goods that are mentioned in the invoice with the actual goods inward in the stores. And the third is whether in any of the past transactions with XYZ Traders Limited, whether it was ensured that the limit was kept below 5 lakhs so that there is no approval required. Then these are the additional checks that I would do, and then I would come to I would derive to an observation, or I would come to a conclusion regarding this transaction. So the next what I have done is I have tried to cover all type of transactions regarding vendor payment, regarding employees, payroll, everything. So in case you have any other questions, I can answer to them one by one. But I have tried by my maximum to cover all kind of transactions. The second was the employee reimbursement claim. The employee's name was Rajesh Kumar. His expense type was hotel and travel. Claim amount was 1,25,000. Supporting documents given were hotel bill, taxi receipts, etc. Date of stay was 10 to 15th March. Location was Mumbai. An employee attendance record showed that he was logged in from Delhi office on 12th of March. Now, what will be the red flags in this case, sir? The first red flag would be that the employee was logged in from Delhi on 12th March, whereas the reimbursement claim put up for Bombay was 10th to 15th of March. So the first red flag is that. The second red flag is for Bombay trip of 10 to 15 March, 5 days. The claim amount of 1,25,000 for me, it seemed a little bit high. So that is the second red flag. And the third is, say the hotel bills and the taxi receipts. Maybe what I observed was they were identical to the earlier visit. So what can go wrong in, or what should I investigate in this cases? That the hotel and the taxi details, whatever mentioned, if I've seen them, if I feel that I've seen them earlier, I should go back to that earlier transaction and check whether the same bills have not been presented again. It happens. It happens that the employee will present the same bill again and again for multiple trips. The second check that I would do with the travel desk of the company, I would check whether this employee has actually traveled to Bombay or not. And then I would also check the expense claims in detail, the hotel bills and taxi receipts. Now, if from where I got this example is that in one of our clients, we had a employee of the company traveling to South India. Now, he had put up a claim. What we do usually when we check the travel expenses or employee reimbursement claim is, when he put up a claim, he had a claim for flight tickets. Now, when we checked the flight tickets or the flight rates during that days, it was almost the same. I mean, we had no queries against that. So that was one thing was taken care of. Then he had put up a taxi bill from airport to the workplace. Now, when we checked for the normal fare on Ola or Uber, from the airport at that place to the working place address that was mentioned, we saw that the amount was much less than the taxi bill that was presented to us. So what we did was, there was a number mentioned on that bill. We tried calling that number and somebody actually picked up that number, and they said that no, we are not into taxi operating. We do some other business, but we are not into taxi operating. So this is the length that people go to put in false claims for reimbursement. So this is how you can check deeper into employee reimbursement claims. And this is what we have done, and we have observed a query. And then there was a recovery of almost 5 lakhs from over a period of many years, of course, but from 5 lakhs from that employee. So this is what we should investigate when we talk about, when we are into GRC audits. This is the kind of exercise that we do. If you want to add value to our services in terms of GRC audits, this is what we have to do. Because I think what is happening is we have moved on from vouching to a lot of value addition to our services in GRC audit. It's not limited to vouching anymore, because that can be done at even in stat audit. So we don't need to do a vouching for internal audits. Anybody else in stat audits can take care of it. In case of in GRC audits or internal audit, it's more about data analysis. You take a dump of the sales register, you take a dump of the purchase register, and that is a lot of things that you can play with in terms of data. There are softwares that give us a lot of reports. Then even for us, we can derive a lot of reports in Excel from the data dump that we take from ERPs or Tele from our clients. So now it is more about that rather than vouching. So this is the kind of check we do in employee reimbursement claim. Now, suspicious payroll entry, ghost employee fraud that happened was, say, employee name was Rohit Sharma, and his department was IT, salary account, Yes Bank with so-and-so employee ID. You can see the details. Joining date was 1st October 23, supervisor was not assigned. The total salary paid was 8,50,000 for the last 5 months, and no lock-in records were found for this employee. Now, what are the red flags? That first red flag is that there was no supervisor assigned. If a person is being paid a salary of 8,50,000 for 5 months, there has to be some supervisor who has to be assigned to that person. The second was we did not find any login records in his biometrics. So that is the second red flag that we should observe. And then the third is that what I did was what we did in this case was we verified the bank account detail, this same bank account details in the HR records. So that means there was some manipulation usually happens. So yes, you should check all this, and then what is the action that we should take is that we have to check whether Rohit Sharma is an employee. You can ask that person to come and meet you, or you can talk to his supervisor or talk to the department head and see whether he is playing any active role in the company in terms of work. Review who created this employee master. The first thing that we should check is who was in charge of creation of this employee master, because without sufficient documents, if he has created this employee master, that means the HR department, somebody from the HR department was also a part of this fraud. So that is the second thing the first thing that we should check. Second is whether we should check with the department head person is actually working with us or not. And then once this is done, we should check all the salary payments to detect whether there is no other ghost employees in the company. So the next case is about a fake vendor email. Sender is say finance, company domain is. Now here if you observe, the company domain is abclimited.co.in, whereas the sender was from abclimited.com. This was the first red flag that we should observe. Subject is urgent bank details updated for vendor payment message. Dear accounts team, please update our vendor payment details effective immediately. New account is this. Finance team action, bank details were updated and 10 lakhs was transferred. This was the action that was taken. Now, what are the red flags in this case? That the domain name is slightly different from the actual domain name of the company. That is the first red flag. Then the second red flag is there is a request of change of account details. without any supporting. So if there is an email for change of account details of a vendor, the first thing that we should expect is that there should be a copy of the cancelled check along with the email. That is the proof that yes, the account details have changed. So that there was no supporting documentation. So that is the second red flag. Just an email should not suffice for the accounts team to update the account details. The third is that there was no verification call. So once a vendor is asking you to change the account details, there has to be an verification call also from the vendor that have you updated our account details, because when a person is trying to commit this kind of fraud, they will try to keep the interaction to the minimum with the company because they don't want to get identified. So what they'll do is they'll just send an email, said quietly, if there is no additional check from the company side, everything will go through. Otherwise, in case there is, if the team is aware and proactive, they will make a call. They will that whether you change the bank details, and or the vendor will call you that we have sent you a mail for updating our bank details. Please ensure that you change it. Sometimes they might have missed out on attaching the document for the cancel check. So in that case, if this kind of call comes, we should ask that the company should ask them to send the check, the cancel check copy. So, so these are the kind of red flags that usually are noticed in this kind of fraud. Now, how could this fraud have been prevented? So, as I already mentioned, a couple of points that this could be the company making a call, the vendor making a call. There is also a multi-level approval process that should be in place in a company, where these are the suggestions that you make when you can make when you come across this kind of a transaction, that there should be a multi-level. And once there is an request of change of account details coming to a company, the account executive will forward it to the accounts head for approval. So once there is two-level approach of approval, I am sure that there will be a certain restriction. I am not saying that we can eliminate the risk entirely of such a fraud happening, but yes, we can at least curtail the risk of the fraud happening when there is a 2 or 3 level approval process in place. So that is why authority matrix, defining an authority matrix in a company is very important. The segregation of duties, which will come across in the later slide, for prevention of fraud, I will talk about it, but that is why segregation of duties is very, very important for a company. Okay, the next transaction is the fraudulent transaction and money laundering risk. In this case, the company was an export company, Greenfield Enterprise. Customer's name was invoice amount 25 lakhs. Payment received on the same day, 25 lakhs. Payment mode was RTGS from an unrelated third party. Previous transaction, frequent large payments and refunds between these companies. So what are the unusual patterns that we notice here is the same day payment happening. That is the first red flag. Payment was made by a third party and not Greenfield Enterprise. That is the second red flag. And the past transactions show that there are a lot of transactions of to and fro of amount happening like this. So that is the third red flag that is there. Okay, so and how can we, what additional checks we can do to investigate this further is that we can check if Bright Star and Greenfield are related parties. Usually when these kind of transactions happen, these are between associated companies or related parties. So that is the first check that we should do, that whether there is any kind of relation being established between these two enterprises or not. And we can check the earlier transactions, whether there is circular trading happening, and report to the anti-money laundering scheme, that anti-money laundering team, that is of a company, that these kind of transactions are going on. So these are the So these are the red flag examples that I was talking about. Any questions still here? I'll be happy to answer them right now. Or any practical cases that you have come across in your assignments and you want to discuss it here without naming the client, or then we can discuss it also. Okay, so now coming to part two of the part two of the workshop, which is the practical case studies. This is what I was talking about. Most of these case studies I have picked up from our clientele, where we have come across this kind of uh, issues happening in a GRC audit. When we talk about a GRC audit, I would recommend every one of you that please invest in good team members. I know it's a cost to us, but please try to invest in good team members who are very good with analytics, who are very good with Excel. Of course, chartered accountants, the team leader has to be a chartered accountant because the kind of outlook or a kind of value addition that a chartered accountant can give. Of course, you can have executives or articles in your team, but leaders have always to be a chartered accountant because the kind of focus that we have when we look into a transaction that an article or executive cannot have. So yes, please invest in good team members or good team leaders when you are going for a GRC audit. It is a cost, but in the long run, it is going to be more beneficial to you because of course, one team leader can handle multiple audits. So that is not, so once you get an auditor, you feel that, okay, this is a high cost of hiring a team leader who is a chartered accountant. But one team leader can handle 3 or 4 GRC audits. So when you give them a team, like of 4 or 3 articles or 2 executives, then that same person will be able to handle multiple audits. So that is a good investment. But why I'm insisting on good team leaders is because they are able to foresee or they are able to put in that intellect when we are looking into this kind of transactions. It is not everybody who can catch hold of this kind of transactions. It's only people with a certain level of intellect, and those who have done internal audits in the past can look into this kind of transactions. So when we start with the first case study, which is a fake vendor scam. The scenario was a mid-sized manufacturing company found that payments were being made to a vendor who did not exist at all. Now, an internal audit revealed that an employee in the procurement department had created a fake vendor profile and was transferring payments to their personal account. Sorry. So how can a fake vendor be created in a vendor master? This usually happens when there is no segregation of duties. The account executive is the one who is creating the vendor, and there is no approving authority for a vendor in the system. The vendor goes active without the approval of the higher authority. So what we usually do is, or we usually recommend as an internal control, is that if an account executive is creating a vendor, of course, with all the vendor master sheet that they have given, maybe they collect all the KYCs from the vendor, everything. But that vendor cannot go active in the system, or no PO can be raised against that vendor unless and until the purchase manager approves that vendor in the system. Now, even in Tele or all ERPs, of course, we have that system facility available, this feature available. But even in Tele, this feature is available where you cannot raise a PO against a vendor unless it's approved. So yes, we should recommend this kind of control to the clients that in case a vendor is created in a vendor master, it cannot go live or it cannot be active unless and until there is an approval from the higher authority. So once that approval is in place, yes, we can create a PO. Another check that we usually do in our cases is when we go to a client's places, we also check for dormant vendors. We usually take the dump of the vendor master and we see that we check for transactions not happening for beyond a year. Say if we have not dealt with a vendor, considering the nature of the business, of course, if we have not done a transaction with a particular vendor for more than 1.5 or 2 years, what we would recommend to the client is put them under the dormant list. Because we don't delete the vendor or we don't remove the vendor from the list, we put it under a dormant list. So in case a PO is being raised against that vendor, then there is always some kind of message popping up that this is a dormant vendor. So we would recommend this kind of control in internal control when we do vendor master audit. specifically vendor master audit, when we do, we will check for this kind of thing. And that dormant vendor cannot go active unless and until there is a specific approval in place. So yes, there might be situations where a dormant vendor is again being used for some other purpose after 1.5 years. That does not mean that we cannot use that vendor. But yes, there has to be a certain procedure of approval to make that vendor from dormant to active, and then only a PO can be raised against that vendor. So this is the kind of checks that we usually do when we do vendor master audits, whether the documents are in place, GST, PAN, everything. We go and check on the individual income tax website, GST website. We see whether the vendor has been blacklisted or not blacklisted, registered vendor, non-registered vendors. There are multiple checks that we can do in case of vendor master. Now, in this particular case, there was a non-existent vendor. So we'll check whether the vendor had no physical address. The red flags that should have come up is that the vendor had no physical address or contact details. Large payments were approved without verification. The same employee was handling both purchase orders and payments. So this is the segregation of duties that I was talking about, that the same person was also creating POs and the same person was also making payments. So that is why you are leaving a chance of this is the loophole that you are leaving, where people can be tempted to commit a fraud. So in case where there is a two different set of people handling these two transactions, then that you are reducing your risk of fraud happening. So segregation of duties that we talked about, and the lessons learned is regular vendor audits to verify legitimacy. So this is the vendor master thing that I talked about in the beginning, that these are the vendor master checks that we can do to avoid this kind of okay. Another check that we usually do is in case of companies who are vendors, we check whether say suppose there was ABC Private Limited. Now what will usually happen is while creating vendor master, the account executives are the purchase executives are so careless that what they will also create ABC PVT Limited as a company, LTD as a company, and then ABC Private Limited also as a company, so as a vendor. So there are two vendors, but with the same, the entity is the same, but there are two vendor master created for a single vendor. In such cases, what we usually do is we do a, once we take the dump of the vendor master, we do a cross check for the PAN, the GST registration numbers. We cross link it. If we see that it is the same GST, it is the same PAN, that means it is the same vendor, but it's just that by mistake it was created into other as two separate vendors. So we'll request the purchase executive or the accounts team to merge it into one vendor master. So these are the kind of controls or checks that you can do when we talk about vendors. So this is again the post employee fraud that we talked about. In this case, the HR officer had created a fake employee record and was diverting their salaries into personal accounts. The payroll reconciliation showed mismatched records, random physical verification receipt. Now, again, another check that we usually do in our case is that we do a surprise when it's a labor incentive industry that we are doing. That is our client. Say labor incentive manufacturing industry, that is our client. What we usually do, the company is working in 3 shifts. Say morning 7 to 12, 12 to 7, and then 7 to again in the morning. So what we'll do is usually I'll ask one of my team members to go at 7:15 in the morning when the shift is about to start. We will check the number of employees who has entered into the premises. Along with the biometric, whatever natures, or they might have a biometric working, whatever might be the mode of entry for the employees, what they usually we do a head count of how many people have actually entered. And then what we'll do is in the next month, in the next month or in the next audit run, what we'll do is we'll check the bill that was put up by that contractor for that particular shift. Or because when the contractor will put the bill for payment to the company, it will always be backed by attendance records of that employer. And believe me, we have come across multiple cases in such surprise checks that we do, that where the headcount is say 24 or 25 in the first shift, and the bill was put up for 35 or 40 employees. and then they don't have any legitimate explanation, and there have been transactions where we have asked the contractor to revise the bill or set it off against the next bill, or they have been discontinued also. In case of huge amounts, that particular contractor was discontinued by the company because of this kind of a fraud that was happening. So this is the kind of check that we usually do when we are talking about post-employee fraud. Sometimes we also do this kind of exercise on the shop floor. That shop floor, there is, say, according to the production, the persons who have gone on the shop floor, because the shop floor area is always demarcated. There is always an entry-exit point. So what we do is we count the number of people on the shop floor. Maybe out of say 30 that we count, 5 of them might have gone for snacks, or 2 or 3 might have gone for washroom. So I can keep a tolerance level of another 10 employees. 30 ki jagah I can say that there were 40 employees on the shop floor, because it's not necessary that when I do the check, all 40 of them might be on the shop floor. But then if the bill was raised for 50 employees, 50 workers, then yes, it becomes a red flag. We should investigate it into further. So this kind of checks usually helps, and believe me, the best of the companies, we have observed queries and such kind of checks that we do. So these are the practical things that I'm sharing about how we do GRC audits. The third was the CEO scam mail, where again the CEO finance executive received an urgent email from the CEO asking for an immediate wire transfer of 50 lakhs to a vendor. The email looked genuine, but was later found to be spoof. The fraudster had used social engineering to impersonate the CEO. Now, what went wrong in this case was the employee acted without verifying the request. He did not check. He just, because it was the CEO mail, the background, the signature, and the signature line of the mail, everything was very similar to what the CEO was sending. He just transferred the amount. There was no dual authorization policy for large payments. Say 50 lakhs is a huge amount. There has to be, the levels have to be prescribed, that 5 to 10 lakhs, below 5 lakhs, the payment can be authorized by the accounts executive. 5 to 10 lakhs, some other persons should be on the accounts executive. There should be some other person who should be authorizing, say, assistant purchase manager. 10 to 15 lakhs, 10 to 20 lakhs, somebody else. And say beyond 50 or 50 and above has to be approved by one of the CEO or director of the company. So these kind of checks that should have been, authorization policy should have been defined, which was not there. So that was the biggest thing that went wrong. And this helps, believe me, this helps when we define an authorization policy. In case of large companies, especially beyond 100 crores or 300 crores, it helps. It helps when we have a certain policy defined. What can be the prevention strategy in such transactions is that surprise audits and spot checks are crucial. And we have to, sorry, this last, I think there is a mix up. The other employee fraud case came here. So please ignore the second point in the prevention strategy. So, sorry, coming back to this, in this case, the prevention strategy can be, we have to train the employees on how to check for the spoof mails that come to their desk. And the other thing is that we have to implement a multi-layer approval policy or authentication policy in the company. Now, the next case is about inventory manipulation, the vanishing stock. A retail company was experiencing unexplained stock shortages in multiple outlets. Despite strong sales, profits remained stagnant. Upon investigation, it was discovered that store managers were manipulating inventory records to steal products and sell them outside the system. So this is a standard fraud that can happen in case there's a pilferage of stock. The stores manager will pilfer the good, and it will be sold off at a lower rate in the market, so that that money goes into his pocket. These are kind of the image or the vanishing stock. If I talk about a recent case in one of our clients, what we observed was that the purchase manager and the stores manager, he was a single person. Like the same person was handling these two different roles. He was also the stores manager and he was also the purchase manager. So what was happening was, that he was ordering goods which was actually not required. He being the stores manager, he was also taking the inward of that goods, and somewhere he was manipulating the issues, and that goods were being taken out of the factory premises and being sold off. The raw material cost. This how did we catch hold of this now? Okay, because since he's issuing the material, of course it will go into consumption. So we observed that the consumption cost was going uh, increasing over a period of time, and we talked to the promoters or we talked to the management, and we said, have you changed the raw material? Have you why is the consumption cost going up? It was this much in say X amount in the previous years, and suddenly it is going to Y amount. Why is it so? I mean, is there any hike in the raw material cost, or have you changed the raw material? We came to know that no, there is no significant hike in the cost of the raw material. There is no change in the raw material. And then we came to know that this was happening, that employee was sacked. But by that time, the company had already suffered a hit of around 12 crores of rupees because of this big breach of stock that happened. So this is the standard example where segregation of duties is very, very important. That a person who is also procuring the material cannot be responsible for the inward of the material. No way. I mean, they have to be two separate people. You cannot assign the same task to the same person. These two different tasks to the same person. So in this case, internal audit compared system stock with physical stock and found discrepancies. CCTV footage showed employees taking goods out of the back door. Dummy sales entries were traced back to specific levels. So the prevention strategy in this case is regular physical inventory audits, which can be announced, which can be surprise checks as well. Automated tracking. There are a lot of automated system coming up for asset tagging in which are RFID or barcode scanners. We can, if the company is in a position to invest into those kind of facility, yes, they should invest and they can use this tracking systems and strong access controls in inventory management software. Inventory management software, the stores module of a ERP, or it has to be very, very the passwords should not be shared by the stores manager. The store manager has to have strong access controls over this inventory management software that is happening. That is in place in the company. Fake reimbursement claim. I guess we have already discussed about the red flags earlier, so we can skip that. Bank loan fraud, which is overstated financials. A construction company secured a large loan from a bank by presenting inflated revenue figures and fake project contracts. The fraud was discovered when they defaulted on payments, and forensic auditors found inconsistencies in financial statements. Now, how it was caught? What was the inconsistency in the financial statements? The financial ratios were not matching the industry benchmarks. Fake customers and contract documents were detected. Bank statement showed circular transactions. That is money moving between the circular trading that I talked about, the green enterprise, where the two parties were in the same related parties, and that 50 lakh transaction was happening. So this is money moving between related parties. So these are the red flags that could have been noticed by one of the auditor, maybe the stat auditor or the internal auditor, more the internal auditor, because when we talk about internal audit, it's why we are more responsible for catching hold of this transaction, such kind of transaction, is because we go to the company. Most companies have a quarterly audit run, so we go to the companies 4 times in a year. Whereas the stat auditors either do 6 monthly or moreover, stat auditor is responsible for all the transactions and more the accounting part of the transactions. Whereas we as internal auditors or GRC auditors are given the freedom to walk through the entire transaction. It's not that we are not given access to say if we talk about purchase to pay cycle, we are also given access to vendor master. We are given to access to GR and reports. So it starts from creating vendor development, vendor master, then raising a PO, goods inward, invoice booking, and then payment. So when we talk about purchase to pay cycle, as internal auditors, we have access to walk through this entire transaction. And more because in each quarter, say if I'm doing a quarterly audit run for a company, for a particular quarter, I'm not going to look into all transactions. This is what we usually do when we talk about internal audit to our clients. We have to make them understand that if you want value addition from us as auditor or internal auditor, or you want some actual difference in your internal controls, please let us have a limited scope. We cannot cover all 5 business cycles in one quarter. We have to divide it into parts so that we can walk through the entire transaction, we can walk through the entire cycle and give them the gaps in the internal control, and then we can also suggest them that these are the suggested controls that you can put in place. So that is why it becomes more of a responsibility of an internal auditor to catch this kind of transaction rather than a statutory auditor, because statutory auditor comes into picture only after the transaction has happened. Of course, we are not preventive auditors. We cannot come into picture before the transaction happens, but at least we can catch hold of such a thing or such a pattern happening in the next quarter at least. So yes, we are more responsible, and that is, we should take our role more seriously in this way, that we are in charge of the, as internal auditor, we are part of the management. We are on the management side. We are not the opposite party. Stat auditor is an external agency. As internal auditors, we are internal agency and we are in support of the management. That is why internal auditors always report to the board and or the audit committee or the board, whichever is in place. Okay, the next case study is about a listed company sharing confidential financial information with a relative who then traded company shares before a big announcement. This led to illegal gains of 3 crores before the SEBI flagged the transactions. Now, how it was caught, that trading activity was unusual before the company's earnings announcement. Phone call record showed suspicious communication between the employee and the trader. Unexplained cash deposits in the employee's bank accounts. So these are the the ways it was caught, that there was some insider trading happening. And what can be the prevention strategies? Strict insider trading policies and employee training, AI-based stock trading surveillance system, and mandatory disclosure of stock trades by senior employees. So this, in case of listed companies, when we are doing internal audit for listed companies, insiders trading and stock manipulation, or inside the stocks, if they are held by any of the employees, what are the mandatory disclosures, whether they are, we have to check into all this, whether there have been transaction in the past quarter by that employee or not. That is one of the things that we should check. Okay, so now when we talk about the prevention strategies of fraud, there are a lot of areas where we can avoid such a fraud happening, which is one is the technology driven prevention strategy, the other is internal controls can be more strengthened, the ethics and the checklist. So we'll discuss in detail about this prevention strategies. When we talk about leveraging technology, this thing, we have 3 main areas where it is the AI and the machine learning, where identifying unusual transactions in financial, unusual patterns in financial transactions. So there are a lot of AI tools available in the market right now, where I was recently at the II International Conference in Bombay on 4th and 5th of March, and I saw a lot of AI softwares available for data analysis. There was at least, I would say, at least 6 to 7 consoles outside the conference venue where people were demonstrating their AI softwares for identifying these unusual patterns in financial transactions. So yes, of course, it's a cost to us. I am not saying that it is cheap. It's a significant cost, but considering the kind of assignments that we have, if we can balance it out after the cost benefit analysis or the cost benefit ratio, if we can bring out that yes, this much, if I incur this much of cost in this much of in this software, and I have so many clients earning me this much of revenue, I think I can justify this cost, then yes, we should invest in this kind of softwares. But yes, if we are only doing 1 or 2 internal audits, then it doesn't make sense into investing into such kind of softwares, but if we have multiple internal audits or GRC audits of large companies, we should invest in this kind of softwares because that really helps. Data analytics, which is a continuous monitoring of financial records. When there is when we take a dump of say an expense register, we will when we filter say salary this much. So over the period of 3 months, if we are talking about a quarter, we compare that okay, salary was this much, then office expenses was this much, the cumulative office expenditure per month. These are the analysis that we should do when we talk about GRC audits. And we, for each expense line item, we compare the total expense in this month over the period of 3 months. And if we see there is a sudden spike, even if it is not it's a downward spike, say even if it is reduced, then also we should go and look into it. I mean, it's not that only if the cost is increasing, then we should go and look into it. Even if the cost is significantly reducing, then also we should go and look into this kind of transactions. Not necessarily we can get it will be a fraud happening, but yes, it is worth looking into, or it calls for an additional check. Then forensic accounting software, which automizes the process of fraud detection. Then the second part or the second prevention strategy can be the strengthening of the internal controls. I was strongly propagating this idea of segregation of duties. I gave you some practical examples of also on why there should be segregation of duties. Why there should be a three-way approach to approval of a transaction, any transaction. Why? Because that reduces or that curbs the risk of manipulation happening. When it's easier for one person to commit a fraud than three people getting involved in committing the fraud. So that is the basic fundamental, that if there is a one person doing everything, executing the transaction plus approving the transaction, the chances that he can commit a fraud are more. And if there are three people approving the same transaction, the chance is because it's difficult for three people to come on board with the same mindset to commit a fraud. So that reduces. That is why we insist on a three-way check approach on all transaction, or three-way approval policy for every transaction. The second is this mandatory leave policy. Fraudsters fear being caught if they are away from work. So this we talked in the first part, where they don't take leave or they will avoid taking leave. So in case of companies, there should be a mandatory leave policies that at least this many leaves they have to take, so that we can reduce the risk of a fraud happening. Whistleblower mechanism, it's very popular these days, where the companies have a tip line or an official hotline in existence, where you can raise your issues or raise your concerns to that on that hotline, which is usually working outside the company premises. It's not in the company premises. This is how usually whistleblower mechanisms happen, that whistleblower policies are in place where there is a hotline, but it is operating outside the company premises, and and the calls on it are anonymous. There is no possibility of tracing the call. So the company employees can put forward their concerns or their issues on such hotlines without getting worried about that they will be caught hold of it or there will be some action against them. So these are the strengthening of internal controls that we can do for the prevention of frauds. The third part is the ethical leadership and corporate culture. When I talked about the integrity at the top management should set a tone that okay, we are a company of integrity. Automatically, when it filters down to the lower levels, it will discourage them or demotivate them from indulging into such kind of activity. That is how I would put it, that they will be discouraged or demotivated when the top management is performing with the best of the governance and the best of the integrity. Automatically, you are setting a tone at the top where the lower level people will not be inclined towards committing a fraud or committing any kind of manipulations, because they know that top level is very much insistent into for that regular workshops can happen on why integrity is important or why corporate governance is important. The second part is the regular fraud awareness training that I talked about right now. incentivizing ethical behavior through recognition programs. You give awards to people who have been the best on his best of ethics and who has brought out the best behavior. So you can the companies can you can suggest that your clients to give this kind of recognition to their employees to reduce. So this is a part of the prevention strategies that you can suggest to your clients. If has a fraud already happened in that company, they will understand why there is a need for the prevention strategies to be in place. So in this case, you can suggest all these points to them, that why the ethical leadership and why is it important. I mean, on the sound of it, it doesn't sound very important, but yes, it is very important. Psychologically, it makes a difference. So now, if we talk about the checklist, fraud detection checklist, this is what I have compiled from my experiences or the cases that we have come across. But there can be a lot of other points that can be added to this checklist according to your situations. This is what, like, a few of the points that I have taken from my experience and added to this list. Okay. So the first is the general red flags in financial transactions. The unusual increase in round number transactions. So 10 lakhs instead of 989,756. Agar this kind of transactions are happening, then you should definitely look into it. Frequent transactions just below the approval limits. We talked about one of the case studies where 5 lakhs was the limit and 4,99,500 was the transaction amount. So these kind of transactions, if they are maintained below the approval limit, yes, it needs to be looked into. Payment to unknown or unverified vendors, duplicate invoices, or slightly altered vendor names. This is what I talked about, the ABC Limited and A.B.C Limited. So these are the kind of red flags that you should check for. And sudden spike in miscellaneous or office expenses or adjustment expenses, be it whatever nomenclature. I mean, but if there is a sudden spike in such expenses, which is not clearly defined, you should go into the breakup of that expenses and then look into it. So when I talked about the IndusInd Bank case that I read about yesterday, this came into light. Why? Because RBI, with effect from 1st April 24, asked the NBFCs to report in detail the transactions that are the line items or the breakup of other assets and other liabilities. So this is why, because other assets and other liabilities, otherwise it was a very generalized term. So NBFC, or if I want to manipulate, I can put my transactions in those heads. Once that reporting started, then it came to light that whatever losses the bank had suffered on account of hedging transactions, they were, instead of booking it into the profit and loss account, it was routed through assets and liabilities with some kind of accounting entries, and it was reflected in the other assets and other liabilities. So this came into picture once the RBI came out with a mandate for all NBFCs to report this kind of transactions in detail. So this is what I was talking about, that in miscellaneous or adjustment expenses or office expenses or general expenses, we need whatever nomenclature. Once in one quarter every year, we should go into the detail of the breakup of each and every line item of this kind of expenses and review it. If there is a significant amount or cost that is there. The employee behavior checklist or the lifestyle red flags is that just hold on, give me one sec, please. The employee behavior and lifestyle red flags is that employee refuses to take vacations, or work is highly guarded, or his work is highly guarded, and or if he's acting very secretive. This should be one of your checkpoints. Then if there is sudden lifestyle upgrades like luxury cars, expensive vacations without a known source income, resisting internal audits or external verification, employees maintaining personal relationship with vendors. Now this is a very strict no-no that you should tell to the companies or your clients, that the purchase team should not have, or the procurement team should not have any personal relations with the vendors. I mean, that is a strict no-no policy that they should adhere to, because this is where the most frauds are happening. If you talk about even private limited companies, the major area where the frauds are happen, or where the kickbacks happen, is this area. The purchase is the most prone area of frauds. So this is the area where we should have the stringent of the control. Most stringent control should be here. Frequent late night access to financial systems or confidential data. So these are the employee behavior and red flag checklists that we have come across after a lot of internal audits that we have done. Yes, we can add checkpoints to this according to your experience. Payroll and HR usually high overtime payments without clear justification. Now, this we have come across in one of our clients, where a particular worker was when we did the HR audit in detail, we observed that there was a particular worker who was drawing a high amount of overtime. And that is how we came to, when we analyzed that the same thing in detail, we came to know that yes, that person was claiming overtime without actually working for. So this is where it's an area. Overtime payments should always be looked into detail and with pessimistic mindset. I would not say negative mindset, but yes, pessimistic mindset. You should always look into overtime payments into detail. Then if there is a sudden increase in new hires without proper documentation, discrepancies in attendance records versus salary payments. So how can how can we find out the discrepancies in attendance records versus salary payments? What we do is we usually take the biometric data of punch in and punch out time, and we take the salary processing sheet where the attendance has been considered. We compare that if the attendance sheet is showing, the biometric attendance sheet is showing 26 days of attendance, barring the 4 Saturday Sundays, the processing sheet should the salary processing sheet should also show the same number of days. But we had observed in so many cases where the working days are 20, whereas the salary processed was for 26 days. So the leave was not considered. Of course, this happens when the HR team and the employee or the worker are in consensus. So we have to be very careful when we do HR audits in detail. Employee receiving multiple salaries under different names. So this we can catch hold of when by checking the PAN number or the PF website details for each employee. Once in every quarter, we should take up HR as a special area of audit, or we should do HR audit in detail. That is the employee master files, the KYCs, the if there is a revision in the salary, the revision letters, the settlement, the full and final settlement. If a person has left the organization, the calculation of the full and final settlement. All these are areas which we usually look into when we talk about payroll and HR audits in detail. The payroll and HR areas of internal audits. Okay, then there is cyber fraud and IT security red flags. A sudden email request for urgent wire transfers, we came across that. Login attempts from multiple locations within a short time. So what we do in for checking this out is that we have the login data of all the employees. Say purchase, we take the names of the team members of the procurement department. We also check whether there is a team of 13 or 14 people in the procurement department. We take the names and email the login IDs of the. We don't need the passwords to do this check. We just need to do the take the login IDs of the employees, and we check from the login data, the edit logs. We check how whether any other person besides this 14 or 15 people have, logged into the procurement module or not. Another check we do is whether say suppose the purchase manager, we see how many days he was on leave. Say he has taken 3 or 4 days leave in a particular month. We check whether anybody has used his login to access the procurement module or not, because that is how usually, because we are very uh, trustworthy when we are working in a department. We tend to give our login ID and password to our team members. But we don't know that there are times when such fraud happens, that he was on leave, the purchase manager was on leave, and there had been a lot of POs that were approved on that day. So this is how we come to know, like we check whether he was on leave on what particular days, and whether his login ID showed access on those days or not. And we have come across queries but of course, if there is a remote access available, we have also got a valid explanation that yes, because it was an urgent PO, he had approved it from home by logging into the system remotely. Yes, then that is acceptable. We don't have any further checks that we need to do. But yes, if he says that no, I did not access the system, I was nowhere near the internet, I did not remotely access the system, then yes, we have to look into it in detail. So this is login attempts, unusual number of password reset requests, vendor customers changing bank account details via email, always verify by phone, and large data downloads by an employee just before resignation or termination. So when there's a full on finance settlement happening, you also need to check whether there was any large data which was downloaded by the employee before he was to leave the organization, because that is affects the confidentiality aspect of our company. Okay, so these are the prevention strategies. Now we come to the last part of this, and then we can have a question answer session. This is a very small quiz that I have. I don't know whether everybody is given audio access or not, but I would want audio access if possible, so that we can talk this out. I don't know, Vaibhav or Jinal, do the participants have audio access? Or maybe you can type it in the chat part. Okay, I see there are some questions in the chat screen, chat window, but let me come to those, come to that after this thing, after I go through with the quiz. Okay, so people are answering already. One is, which of the following is not a common area of fraud? Asset misappropriation, insider trading, financial statement fraud, and customer satisfaction fraud. Yes, customer satisfaction fraud is not a common type of fraud, because why it cannot be a common type of fraud? Because customer satisfaction is not within our control. See, for fraud to happen, a person who is handling the information has to be in control. In this case, customer is not in our control. That is why customer satisfaction cannot be a common type of fraud. Okay. So the next question is, if an employee resists an audit and refuses to take vacation, this could indicate high work commitment, potential involvement in fraud, personal reasons. This is very obvious. It is a potential involvement in fraud. A vendor submits invoices with slightly different spellings of their company name each month. What would you do? 3, everybody is saying what? B, that is ignore it. It's just a typo. Verify vendor details and check for duplicate payments. Approve the invoices to maintain good vendor relationship. Report the vendor to a police immediately. Police will not. That is okay. When we talk about fraud, or when we are into that process of making observations of a fraudulent transaction, please note that reporting to police is outside our scope or outside our purview. So never ever, as our role as an internal auditor or GRC auditor is that we report the nature of the transaction or the fraudulent nature of the transaction to the maximum to the audit committee, or we bring it to the notice of the board. We do not need to go any further. We cannot go to the police. If it is to be, if the matter is to be brought to the police, it will be the management's prerogative and it's not ours our duty. So the D is ruled out. Yes, verify vendor details and check for duplicate payments. The fourth is which control is most effective in preventing payroll fraud. 4 is A, conducting random physical verification of employees, the surprise checks that are on the headcount that I mentioned. That is the most effective way. And what is the common red flag in CEO email fraud? I see C and D is coming up as answers. It is D, that both B and C is the common red flag. The request is always urgent and confidential, and the email address looks slightly dicey. Okay, so these are the answers to the pop quiz that okay. So we let me now see what are the questions that are there in the chat window, if there are any. Can you please share the PPT at the end of this session? I think WRC can do that. I don't know how, I don't know how I can share it. I can mail it to the WRC team, and then they can put it for all the participants of this workshop to download it. I don't know, Jinal, how can we go about that? I don't mind sharing the PPT with the participants. What is the other question? Okay, somebody has asked for GRC audit, any additional qualification required other than being CA? In fact, for GRC audit, you are not even required to like you are not required to become a chartered accountant also. So it's not for GRC audit, there is no specific requirement unless the company wants to appoint a chartered accountant firm as a GRC auditor. Yes, you are required to be a chartered accountant. Otherwise, even a CIA degree can work, the certified internal auditor from the Institute of Internal Auditors of India or the US, and we have a branch in India. Yes, you can become a CIA and take up GRC assignments. KYC, somebody has suggested KYC once a year can also help for employees, I guess, the employee fraud. How can we start working as a GRC auditor, as a proprietary firm? Can we start practice as GRC auditor? Please guide on how we can start to get work in this field. You have to talk to people and enhance your, expand your knowledge bank regarding audit, and I think you can get assignments. Or what I would suggest is, if you have some known sources, known firms who are into GRC audits, you can start taking experience of GRC audits with them and then divert into individual assignments. That will be a good way to get good exposure, because I think individual proprietary firm might not get good assignments or good companies, because usually companies would look into firms with at least 5 to 7 partners, the large companies. So individually, you might not get those kind of assignments. So in that case, it would be good to network with some larger firm and then divulge into other individual assignments. Okay. Others impersonation without commercial one. I did not get this question from Nita. What is the mechanism to charge fees for internal audit? Okay. So usually what we do is we count the number of working hours per quarter that are involved in the assignment, the level of the staff that I would be deploying, plus my time. We'll put a cost against it, and then arrive to a figure costing, and then we add our margin to it, and that is how we quote. Usually internal audit fees will be higher than statutory audit. So there should not be any hesitation in asking if the stat audit fee for a particular company is say 3 lakhs. But if my costing is coming to 5 lakhs, don't hesitate to charge, because the amount of value addition that an internal audit can do is much more than a statutory audit. So yes, you can charge then more than statutory audit. Please don't take stat audit fees as a benchmark for your quoting your fees of internal audit. Whether in GRC audit and internal audit scope is same or increased with new concept scope, we expected to cover more with technology based. See, GRC audit and internal audit is internal audit has diverged into GRC audit. So we were covering all these areas in internal audit, but we were into that old school exercise of internal audits. And right now we are doing governance. We are also going into the top management ethics, ethical behavior, the corporate governance part, and at the same time we are also looking into the risk that can be addressed or the risks that can be eliminated by a company, and compliance. Compliance is the statutory compliances, as well as when we talk about manufacturing companies, there are a lot of other compliance, the pollution board, the labor license, the factory license, all these are part. The statutory auditor might not look into all these areas, but as internal auditors, when we talk about compliance reporting, yes, we have to check into all these areas also. So with this new concept that you have come up, or this new expectation, I would not say it is an concept, but then the promoters of companies are now looking into this kind of services when they talk about internal audits. So yes, technology will help in giving this kind of service. So a person impersonated as CIO of our company on a WhatsApp group. This was reported as an incident to risk department. Can this be termed as fraud? See, a fraud, it cannot be termed as fraud unless and until there is some embezzlement of funds or there is some loss, financial loss to the company. So when you talk about fraud, there also has to be some financial loss or financial embezzlement associated to that thing. So if he has just impersonated as a CEO of a company on a WhatsApp group, but there has not been any misappropriation of funds or embezzlement of funds or leakage of funds or revenue loss, then you cannot term it as fraud. As per our auditing standards, the internal auditing standards. No, we cannot report this to the cyber cell. Our duty as internal auditors will be only to report it to the board or the audit committee, and then they can take it forward. What level of control can the management have on reporting in internal audit? Can they dictate the observations presented? Usually what happens is, now this question is very interesting, because I have come across such requests where there are some very significant observations. The board, we would have a request from the CFO or the CEO to not present it to the board unless, but as internal auditors, I would suggest that we are not reportable to the CFO, CEO. So without worrying about the cooperation in the next audit run, we should bring it to the notice of the management or the audit committee or the board. Maximum we can do is that instead of putting it in on the face of the main report, we can circulate a separate management report. But yes, it cannot be non-circulating. Not circulating is not an option. We have to bring it to the notice of the management, but we can keep it out of the report, main report or main internal audit report, and give it separately as a management report or a special report. Any more questions? I don't think I don't have any more questions. So in that case, can we end this? Ketan bhai, Jinal, anybody online here? Rekha?
We don't have any questions, then we can end the session for sure. Yes. So
Thank you so much.
have you seen? You have gone through
Yes.
all the questions.
Yeah,
Which
I scrolled through the
there
entire
are a lot
chat
of
window. I addressed all the questions, what were there in the. If
yeah.
you want to
I
talk
listened,
open,
but have you gone through the chat box also?
yeah, I went to the chat box,
All
but if anybody wants to ask right now, I don't know they have the audio rights or not, but if they want to ask, I am very
No.
to
No.
them.
The question is whether we can get the PPT.
And that I'll send it to you. I can send it to Vaibhav and then you can put it on
Yes.
the WRC website where they can
Yeah,
download it.
yes. Thank you very much.
Definitely,
So
with the speaker's permission, what we are doing is after the speaker gives the permission, we upload all the PPTs on the WRC website.
Okay,
yes.
okay. So
So
I'll
that's why
send
I call your
the
permission.
presentation to you. I'll share the presentation with you.
Yes. So thank you very much, Rachna. I listened to all your presentation. It was a fantastic presentation, and the case laws you have taken, the case studies and practical examples were very nice, and very good insights to all the participants. And there are a lot work to be done in these fields. I'm sure. So जितना करो उतना कम है in a short.
I would second that, Rekha, that GRC audit में जितना भी करो उतना कम है. There is so much of work that we can do in this area of practice, and it's a very interesting area of practice as well.
Interesting area in a practice, and कुछ मतलब जितना कुछ अच्छी चीज है उसे कुछ उसके साथ कुछ threats भी है, कुछ मतलब risk भी है. So we have to analyze. It depends on the person to person what his risk appetite is. So how much risk he or she wants to take. जितना करना है उतना जितना करते हैं, जितना कर सकते हैं वो तो सब कम ही है, because lot of frauds are happening and lot of things are happening day in day out. We are listening something new. So जितना रिसर्च करो वो भी कम है. So but you did it fantastic. Let me congratulate you
for giving me
first
this
of all.
opportunity. Ketan bhai, Jinal, Rekha, thank you so much for giving me this opportunity to present
So
this.
Rachana, thank you very much. I would like to thank you on behalf of WRC and Chairman of Women and Youth Members Empowerment Excellence Committee. And thank you, Ketan bhai, for being here. Thank you, Jinal. Thank you, all the participants, for being here. So, Rachana, we'll keep bothering you again and again.
No worries. I'll be happy if you bother me.
Yes. Thank you very much. Thanks.
Thank you, Rachna.
Thanks
So much. Thank you.
Thank
Bye.
you. Bye-bye.